As we end the year, it's vital for you to take proactive steps to optimize your financial situations. This video provides a comprehensive checklist to guide your year-end financial planning. Hello, my name is Tommy Cloud. I am president of Third Act Retirement Plan, a company that I started back in 2000. I am also a certified financial planner and qualified Kingdom advisor. I tell you, as we're here in the fall, with me being in Georgia, it reminds us a lot of college football, something that a lot of us down here in the Southeast follow, and of course all over the country. But with this new NIL money thing, I tell you, we're seeing so much parity in college football because they're spreading out. One of the reasons is they're spreading out all these quarterbacks, and if there's a good second string quarterback, they're not going to sit on the bench. They're going to want to go play. And it's really become a lot more parity. It's really mirroring a lot of what we see in the NFL, where they have the draft each year and let the bad teams pick first and so forth and so on. The top quarterbacks spread out. But I know a lot of you guys follow NFL as well, or maybe not any of the sports, but my wife and I cheer for rival teams, so it's kind of funny in our household down here. Also, as we're in the fall, we're reminded that it's year end. And we're reminded that 2025 is creeping around the corner, and we really only have till December 31st to do many of the items financially that we may not have done previously in the year. Keep in mind, this is only a checklist. This is a list that will get your mind thinking about these different general topics. I'm not going to go into great detail or give specific advice or tips into these areas that I'll talk about today in this video. I want to start with required minimum distributions, or RMDs as they're called. And I have a video on that you can watch. It's a very short video that explains to you just about everything you'd want to know about RMDs. If you're 73 or older, it's crucial to take the necessary distributions by December 31st to avoid substantial penalties. And then we want to look at qualified charitable distributions inside of IRAs. Those are called QCDs. For those interested in fulfilling their RMDs while contributing to a worthy cause, consider qualified charitable distributions. These can satisfy an RMD up to $105,000. And I think that's definitely something to consider. If you're 70 and a half or older, you can use QCDs to donate to qualified charities even without an RMD. However, remember that donor advised funds cannot accept qualified charitable distributions. Keep that in mind. Inherited accounts. If you've inherited accounts subject to stretch rules, and a lot of our have, as you know, the generation is passing, the baby boomer generation is passing a tremendous amount of wealth. They have a long way to go, but some in the baby boomer generation are starting to pass away, and they're leaving a lot of IRAs behind. And these are especially important to understand IRAs that are inherited after 2020. Only eligible designated beneficiaries can continue using the quote stretch IRA. Starting in 2025, which of course is next year, non-eligible designated beneficiaries with accounts inherited after 2020 will also need to take the required minimum distributions. And what about retirement planning? Let's delve into that. The deadline for employee contributions to employer-sponsored retirement plans is December 31st, while contributions to IRAs can be made until April 15th. You probably know that. Income limits and deductibility. If you or your spouse is covered by an employer retirement plan, your contributions might not be fully tax deductible depending on your income. This is an important consideration to discuss as well. What about catch-up contributions? For those aged 50 and older, catch-up contributions can significantly boost your retirement savings. Review your plans, especially if you're nearing retirement, to see if adjustments are necessary. Also consider withdrawal order and spending strategies for efficient use of your retirement funds. And what about a health savings account? I also have a video on that you can watch. It's another short, I think 10, 11 minute video that'll tell you everything you probably want to know on HSAs in a very short amount of time. I really made it compact. We encourage eligible viewers to maximize their health savings account. It's got a triple tax benefit if you use it for medical purposes. And if you don't use it for medical purposes, you can use it for retirement withdrawals, and it'll be taxed just like an IRA. The deadline for those contributions is also April 15th. For those age 55 and older, there's an additional $1,000 catch-up contribution available, whereas with the IRA, it's age 50 for the catch-up provision. Tax benefits We'll educate you on the tax-free growth and withdrawal benefits of HSAs. These accounts not only provide a tax advantage way to save for medical expenses, but also offer significant tax benefits in retirement. And then of course you have education savings. Contributions to education savings accounts like 529 plans or Coverdell ESAs can provide significant tax advantages. While most states set a December 31st deadline for state benefit purposes, some extend it to April 15th of the following year. In the state of Georgia, for example, you can contribute up to $8,000 and deduct it from your state income tax, depending on your income level. State-specific benefits, there's various tax advantages and potential state-specific benefits of these accounts to maximize your savings for education purposes. Then you also want to look at investment portfolio of the year as well. We can look with you for our clients. Most of our clients will assess their portfolios for tax loss harvesting opportunities as the year ends by tallying up gains and cashing out on the losing positions. And we can offset up to $3,000 of ordinary income. However, you do need to be mindful of the wash sale rules when selling securities. Mainly that's with identical securities. You can't sell once and rebuy it, identical within 30 days. So keep that in mind. We also want to review your asset allocation, risk tolerance, and the tax implications of portfolio rebalancing, just to get the different portions of stocks and bonds and precious metals or private equity, private credit, whatever it is that you have, how we're going to rebalance that. If you need income, using rebalancing proceeds or fund distributions can meet your cash flow needs without generating additional capital gains. What about active versus passive holdings? You want to identify opportunities for tax efficiency and lowering future capital gains by reviewing active versus passive holdings. Additionally, we review with our clients your liquidity buffer to ensure that our clients have adequate funds available. Roth conversion, for those concerned about future federal income taxes, considering a Roth conversion can be helpful. I also have a video on that you can click on and learn the 7 deadly sins of Roth conversions. This strategy allows you to lock in your current federal tax brackets. So anyone that is 24% or lower in 2024 should definitely consider Roth conversion. Tax rates are historically low in this country. Our highest bracket right now is 37% or 35%. I think it's 37% right now. And historically, that's not real high in the US. And globally, that's not real high for the highest bracket. Future RMD impact. You want to understand how future RMDs from tax-deferred accounts could affect your tax situation in retirement compared to a Roth IRA. Also, you want to discuss inheriting Roth assets, benefit your heirs with a larger tax balance. We review taxable portfolios to determine the best method to pay conversion taxes while you balance the tax bill with other deductions. That's something else you want to do. You want to stay within your federal tax bracket by either accelerating or income. This can be particularly important for those reviewing their Medicare income related monthly adjusted amount notices, and those are sent out in November. So keep an eye out for those. Then of course you have Medicare planning, and you want to plan for future years by reviewing these notices and considering strategies to minimize your IRMAA. Now again, I just said that. That stands for Medicare income related monthly adjusted amount. Additionally, you may exercise non-qualified stock options to stay within a lower tax bracket. If you're in, say, the 12% bracket, go ahead and exercise as many of those non-qualified stock options that you can before you jump to the 22% bracket. You can also do it in the 24% bracket. Exercise as much as you can until they jump you up to the 32% bracket in 2024. Then you have the Affordable Care Act subsidies. You really want to look at your next year actually qualify for subsidies under this Affordable Care Act plans. Open enrollment's going to take place in November 1st, and that'll run through December 15th. So about 6 weeks, and you want to look at that for kind of your Affordable Care Act. A lot of people call it Obamacare. And then we get into the charitable giving, and there's lots of tax benefits that can go with charitable giving. If you're itemizing, you can deduct up to 60% of your adjusted gross income for cash contributions. So this is for people in different situations, usually people that are nearing the end of their life. Now, how would you know if you're nearing the end of their life? Could be terminally ill. They could be 80 with millions, or 85 with millions of dollars. And maybe they can, maybe their income is only $250,000 a year, and they want to give away $100,000 or $150,000. So those are some situations where that might be applicable. Another thing you can do is take advantage of being able to donate appreciated assets. You can deduct the fair market value of the asset without paying capital gains, and that goes up to 30% of your adjusted gross income. So it's half of what the cash contributions are. You can also use donor advised funds as flexible giving option and bunching charitable contributions to maximize deductions. Bunching charitable contributions just means that you do it every other year. If you're real close to that standard deduction, if you're say giving around $20,000 to $30,000 a year, and you want to, instead of giving $20,000 in 2024 and $20,000 in 2025, you could potentially give just $40,000 in 2024, and that would take you above the standard deduction. So you'd get to deduct all of it. And then in 2025, you take the standard deductions. And then of course you have the annual and lifetime exemptions. The annual gifts and other estate tax reduction strategies. For 2024, you can gift up to $18,000 per person. So for those that don't know what the estate tax laws are going to be, they're supposed to sunset and come down. You might want to give away $18,000. That may fit with what your goals are and what's important to you to give $18,000 to family members. We already talked about charitable giving. You want to make sure your estate plans are up to date before you go into the next year and they're aligned with your goals. You want to review how much of their lifetime estate and gift tax exemption you have used and maximize up to $13.6 million per person in 2020. And that considers annual inflation adjustments. A lot of people that's not going to impact. But for those that it does, it's really important to keep up with the lifetime estate and gift tax exemption. And in particular, those folks that have received a large amount of money, either through an inheritance or some other way, maybe an injury settlement or something like that. By following this comprehensive checklist, you can optimize your tax situations as the year comes to a close. Remember, proactive planning can lead to significant tax and financial savings. If you found this video helpful, please give it a thumbs up, subscribe to our channel for more valuable content, and share it with others who might benefit. If you have any questions or need personalized advice, leave a comment below or just reach out to me directly by clicking on the link below and scheduling a very brief call with me, and we can talk about what you can do year-end to have a better financial preparation for 2025. Thank you so much for watching. I really appreciate it, and have a happy year-end 2024 financial planning.